Good morning. I'm Jayaram from Almus Risk Consulting. Welcome to Almus Market Morning. We saw European and US indices hit a new high yesterday, helped by strong earnings. So far, the season has seen better than expected earnings from major corporates that has helped the indices to keep moving higher. Of course, now the macro policies of central banks will take over as we head into Fed meeting today and BOE on Thursday. Focus will be on Fed's language and also the pace at which the taper will be done. 15 billion per month is already discounted, and with CBs increasingly focusing on wage inflation, any hint about rate rises in 2022 will be seen as hawkish and support a dollar rally. If they sound dovish, immediate reaction may be stock rally and dollar fall, but that will be also reversed as market will perceive them as falling behind the curve. Bank of England action will be seen in a similar perspective. There has been selling in sterling as a profit taking ahead of the meeting, but a hawkish move by BOE will see it rally to 1.39. One of the central banks which has been quietly influencing the dollar index is the Swiss National Bank, which keeps intervening in euro and USD to avoid franc strength. However, in the last few days, they have slowed down their action, which has also contributed to weakness in the euro, lacking buying support. This may be seen as SNB adopting a strong exchange rate to control inflation rather than resorting to monetary policy change. RBA, or Reserve Bank of Australia, also abandoned the yield curve control based on improved economic conditions, but AUD fell after that as it had already rallied ahead of the meeting. Euro also fell after the yields there fell by repricing rate hike prospects. Crude made another corrective move lower after making lower high. We now await OPEC decision on any output change. For the rupee, flows related to ongoing IPOs and also positioning for the upcoming record IPO of Paytm has pushed the dollar rupee lower, but we are still holding in that strong support zone of 60 and 70. At least for today, that level should hold, because we are heading into Fed meeting and also the non-farm payroll on Friday. If we do see a dovish message from Fed and dollar index falls, we might see a gap down opening on Monday. Otherwise, overall structure looks like dollar rupee will hold above 74.50. Thank you.
Thanks, Jayaram sir. This is Pankaj. So I think broadly everything being covered by Jayaram sir. What I'm looking at, that currently the market participants will be watching today's FOMC outcome cautiously, in a sense that they would be seeing whether the rate hikes expectations are being built up by Fed members also. Since it's a meeting where projections will not be given, dot plot would not be given, there some statement would be there from Fed chairman, and that will hint a lot. Yesterday, benchmark 2-year yield fell by 6 basis to 46 basis point ahead of FOMC outcome, whereas the 10 years yield fell by 2 basis point to 1.55%, leading to yield curve steepening. In the same breath, we can also see that US long-term yield curve is getting inverted, whereas 30 years bond yield currently is lower than the 20-year bond yields. Without a rate cycle beginning, 30-year bond yields started coming lower than the 20-year bond yields, which gives that the rate hike cycle would not be very steep, and market participants as of now going by the Fed guidance of Fed directive that the inflation is transitory. Broadly, USD index was stronger yesterday. Precious metals were weaker. Seems positions realignment before Fed outcome, and Asian currencies are little weaker. Rupee will have its own way, because significant amount of a flow of IPO is expected, and how RBI absorb that IPO or maybe intervene, that will be watchful. In India, after RBI efforts, short-term liquidity, which basically indicated by overnight liquidity, has come down to 3 lakh crores, lesser than 3 lakh crores, whereas the liquidity, total liquidity available in the system, banking system, is around 8 lakh crores. And the reduction of liquidity came primarily because of a continued variable reverse repo rate operations by RBI. Yeah, that's all. Thank you. Have a nice day. Wish you everyone a very happy Deepavali.